All right, guys, I am back again with another video, and I'm bringing back that 1970s flair with this afro, recognizing the pioneers of the afro, Link from Mod Squad, Jim Kelly, the Kung Fu artist, also the Jackson 5, and also DeBarge with those big old afros. So just recognizing those folks and throwing my 1970 flair back into the mix. But this video today is not about the afro, it's about Ichimoku. It's about basically, I made a trade today, and I was trading an order block on Ichimoku. So I traded a bearish order block on Ichimoku. Wanted to show you how that trade turned out. Netted $4,000 on the trade, and just want to go over that. But also going to let you know that I'm going to be creating a video this week that's going to talk about trading order blocks with Ichimoku. So how to trade Ichimoku using those order blocks. So that'll be coming out this week or a little bit early next week, depending on what happens with the flow. But basically, guys, that's it. I want to bring it to you and let you see how I did. And also in the video, I'm unable to really talk, so I'm overlaying the video because we share some office space right now, and I'm not able to always talk on my mic when I need to. So just want to do it now to show you and get this video out as quick as possible for you guys. So stay tuned. Here it comes, coming up right now. All right, guys, so here we go. We're getting ready to start this thing up. As I said, this is a video. As you can see, it was 9:30 a.m. here where the market opened up. And at that time, I saw this order block after the market moved a little bit. Saw this order block. I outlined it. And again, I'm using Ichimoku. And the reason I'm using Ichimoku, guys, is because I want to be able to show you that Ichimoku does work on the lower time frames. You can use Ichimoku when you're day trading, and you can use Ichimoku to scalp. I usually didn't do it a lot because I used to just basically swing trade most of the time, especially with the Forex market. I don't really scalp the Forex market ever. I just swing trade the Forex market. But trading futures market, I don't really swing trade it a lot. I basically day trade it. And there will be times where I will get into some swing trades. But since I'm day trading it, I wanted to prove to people that Ichimoku is as good of a tool as any other. So therefore, I'm using Ichimoku to show you my trades right now. Again, market opened at 8:30. It was still a lot of volume in the market, still kind of big moves. I usually use a 2000 tick chart. Today, I'm using a 2-minute chart. Okay, so you can see I've gone from different time frames to let you see that, yes, I use Ichimoku on a smaller time frame using tick charts. I use Ichimoku with 2-minute time frame, with 5-minute time frame, 4-hour time frame, 4-hour time frame, hourly time frame, and daily time frame. So let's get this video going so I can talk you through this trade. It's going to only take about 10-minute trade, I believe. So I started the video once I saw that we were approaching this level. I also was looking at this breakout. Now, let me tell you something about this breakout. This orange line here, these two orange lines are the opening range breakout of the 2-minute candle. So I was looking at a 2-minute breakout. I don't really ever trade that breakout too much, but I'm going to teach you how to trade the opening range breakout using Ichimoku, because you're going to use Ichimoku bias to trade the breakout. So Ichimoku was mixed signals here, okay? So I wasn't even looking to take the breakout. But when we looked at that breakout, here's where a lot of traders get trapped. This market moved and closed above the 2-minute breakout, 2-minute daily candle, 2-minute candle breakout range, which was 1, 2, 3, 4, the 5th candle. All right. So right here, we broke out of this range. This is where a lot of traders go long right here. And then look what happened. There was no way to even get out of that. You were stuck. So that's what I'm showing you. That's some things that you really want to watch for, because this is basically orders all up in here. And when the way it left this level, we kind of expected it to come back. So not taking that, when I didn't take that breakout and saw this happen, I kind of knew that we would see this market come back to this level because of this block here. And matter of fact, when I look at a block, so just the basic blocks, we're talking about a bearish engulfing or bullish engulfing. But here you have a red candle, a red, green, red. All right. So that's a little consolidation, and then the market dropped. So now we're going to look at trading that level. I'll try to talk you through it. I love to use this delta, cumulative delta. This is the delta rotation here. I love to use this. It shows me supply and demand, basically. It shows me divergence. So when I see a divergence in supply and demand, then I'm looking for a trade like this right here. So earlier, after this trade, there was another setup. I didn't take it, but it was a perfect setup. Had a nice big rejection, and it was on a low like this, and it was above the cloud, but it was pushing below Tenkan-sen Kijun-sen. So I looked at my delta, and my delta had a divergence on it, all right, which was telling me that we had decreasing supply and increasing demand coming in here. And then you could see where the demand took off, because look at the market dropping here. So as the market's dropping, then we should see the cumulative volume dropping to the downside too. But instead, we had the cumulative volume increasing, which showed an increase in demand, decrease in supply. And the market went higher from this point. And you could see what happened. The market moved up into that zone. Now, I wasn't thinking about trading this right here, but just something I want to show you, because that is another setup that I use, and I'm going to make a video on that also. This to me is like awesome. There's so many things you can look at with this cumulative volume, and the divergence just is crazy when you see it. All right, but let's talk about this video. Let's get this video going real quick. All right, so we are on the video, and I already put my order in. So let me back this thing up. Try to back this up. I want to back it up to before. I think I put my order. So here I'm getting ready to put my order in. All right. And I'm late putting it in, but I figured there's two ways to trade this. All right. So I'll tell you about it in a second here. Let me talk about what I was doing. So what I was looking at was, I like to trade these zones as like walk them, but you could see it already triggered me in and dropped real fast. It dropped hard here, and it dropped hard again here too. So I don't really have time to really tell you anything, because you could see what's happening. But I like to walk these zones. But you could see I got triggered into the trade. I'm already up 1,400 right now. At this point, 1,500. All right. And normally, like looking at this, you'll wonder why I didn't take my profit here. I'll tell you why in a little bit. You could see I bring in to show you how much this trade was making at this point. You could see the amount right there. Then I expected this market to drop down to this level. So I'm really looking for the trade to come down to this point. I would have, if the market pushes up, it needs to break that level for me to feel like we're not going to be able to go lower. Now I'm drawing another block here. There's another order block right here. All right, and that's what's keeping me in this trade. Okay, this second order block, we have this imbalance in here. Then you have this order block and an order block above it. So this block and this block, and then this imbalance. All right. So what I'm looking at now, I'm in the trade. Really hard to tell you, you know, when Ichimoku was bearish and all, you're below the cloud. So I look at that signal as if I'm below the cloud, I'm bearish, I'm going to short the market. So therefore, when I took this trade, I actually was looking to see if I could get the trade, if this market would have pushed up like this, pushes up into the zone, because I start my trade here, but I like to be below the market if I'm going short. So I start my trade at the bottom of the zone, and then as the market pushes higher, I move my entry higher. So if the market gets to the top of the zone, I have my short sell order right here in the middle of the zone, and then I allow the market to come to me. In this case, it didn't get up that high, and by the time I put my order in, it already dropped. I almost missed the trade, okay, because it dropped so fast. And usually when we hit these order blocks, a lot of times you'll see that it may only touch the block and then drop. Not often does it really come way into the block, but when it does, I like to walk that zone. And I talk about how to walk the zone on a lot of my videos, because I walk support and resistance zones. I always want to let the market go deep into the zone and then let it come back into the direction of the trade before I get into the trade. I don't like to put an entry here and then the market pushing up, trigger me, and then go. Sometime I will, depending on how I'm trading, but a lot of times that sometimes is something that's going to get you stopped out. Now, when I'm trading these order blocks, at times you'll see me do that because I already have a set determined range that I'm going to trade, and I'm going to take that loss if that's what it's going to be. But in this case, we got a good trade. I've been having some pretty good trades, and I don't want to be biased and just show you my winning trade. So my next losing trade, I will post and talk about what happened or why I think it happened, or if it did anything wrong, or if it was out of my control. But we'll see. I'm not at that point yet. All right, but here we go. So here's where I was saying to myself, well, this block is going to hold. So I wasn't thinking about taking the profit at this point. Scalping the market, yes, could have taken that profit. But I'm not thinking about that profit right there. I'm thinking about this level holding. And then I'm thinking about we're in between this area here of this major rejection. All right. So the market needs to violate this level in order for this market to come higher than this. Okay. So I'm thinking we're pretty good here, and I'm giving this market a chance. As you could see, look at what I have on my chart when I'm looking at what's going on. I have a TK crossover that's bearish with angulation that was really good at points. You could see how the angulation is really strong. And then they separated. So now Kijinsen flattened, and then Tinkinson still was going. Now we started dropping pretty good here. And then my Kumo was bearish. Okay. And then my Chiku span was also bearish. And then we're below the cloud. So the cloud is support and resistance. So basically the cloud is resistance, a resistance zone for us. So I didn't take my profit. Then the market at this point, the market moves pretty quick because we're only at 10 o'clock in the morning, 10:02 right now. So therefore, there's still a lot of volume in here. Big moves are happening. I was not prepared here for this to happen because I didn't think it would push back this far. All right. But I was prepared to take not a loss, but not a big win either, because it would have to close above this level to really be the end of this trade. And as you can see, the market still honoring this zone. All right. So when it rejected like that, I felt really safe about the trade at that point. And then my next thing I'm going to start to do is make sure I'm going to take my profit right here. So that's going to be the end of the trade when I get down to this point. All right. So let's see what the market does. We're doing pretty good. So like I said, this is like basically a 10-minute trade. And I wasn't looking to make like a big long run. I just was looking at my structure level. So this is the one. This would be, these blocks are going to be other levels, okay, of structure. And then overall, to violate structure, I would have to be up here. All right, so in between this whole area, I'm bearish until we break this upper level. All right, and basically it would be the cloud. We'd be breaking the Kumo breakout. But you can see we're dropping pretty good. We're hanging in there. I felt good. Only thing that I was worried about was this right here. Let me show you. I was worried about my crossover, my TK crossover, because my Tinkinson was flat and so was my Kijinsen. Both Tenkan-sen and Kijun-sen became flat right here. So I didn't know what was going to happen in this area. And then I started to think that maybe I'm going to be looking at profit in this area. All right. But I still felt good because we did have that crossover. All right. We had all bearish signs. And then we failed to break the TK zone, though. So one thing I do know when trading Ichimoku, and we are bearish, and if the market is bearish, strong bearish, and it comes above Tenkan-sen and Kijun-sen with a bearish TK crossover, a lot of times we're going to see that market continue back to the downside. All right. Usually you'll see this market still drop with this kind of crossover like this. All right. And the market's above it. A lot of times you're still going to see it come back to the downside. All right. So I'm looking for this double bottom down here. That's what I'm basically looking for. Now I feel really good because we rejected here. We stayed within this rejection zone right here. We weren't able to break that area. We stayed inside. We rejected here. All right. So all these orders getting sucked up here. A lot of liquidity in this area. All right. And then the market's dropping. Now we're pretty decent. I put my target right here because this is where I'm going to be shooting for. And then we'll see where we go. So we're pushing back up into this level. And this again where I started worrying because I was so flat here. But one good thing is that Tenkan-sen never angled to the upside at this point. So that's my short-term market direction. And it never pushed up to the, it never pushed to the upside. So I was all right there. All right. And then we're still holding this level. All right. Got to break these highs in order for this market to start breaking this structure. There's a lot of orders in this area. All right. So let's see. The way we left this area was outstanding, and the way we left it again, then how we came right back to it. Like we left it so hard and then came back to it very hard. And then created another block here that we left very hard and then came right back to it very strong. All right. So that was strong the way we had these blocks and the way we left and approached back to these levels. So when you're looking at a block, to me, the important ones are the way we leave it and the location of it. If it's at a low or a high, this is at a nice high here. It's resistance with the Kumo. So we had confluence with the Kumo and the order block. So we had a nice strong resistance area. All right. So when we pushed up into that point, you could see where this high is here, and we never really broke up into that area. We were making lower highs at that point. Okay. And now we are pushing down. I'm surely going to take my profit. I'm figuring at this point, we're about 25 right now. And here we are at 3. And we want to get right to this point right here. That's what I'm trying to show you right there. All right, so there we go. Getting here. There it is, 4,000. Boom, we're out of there. So that was it. That was the trade. Okay, so this video is going to start over, and we don't want that. So basically what we really want to talk about is, hold on one sec, is overall the trade. So these structure levels are very important, especially this bottom here. And I can't even show you right now because this is blocking me. But really, when we look at that point, let me show you another chart real quick. What I was trying to talk about. I saw this a little earlier, and then I'll close it out. So let me remove this one. I don't need that on my chart. We'll just push it down for now. Wanted to show you what I was looking at here. So this market was bullish. You could see how it's above the cloud. All right, and then the market pushes down. It's a bullish market, even though the crossover is bearish. When I'm above the cloud, I'm bullish. When I'm below, I'm bearish. So I'm going to look for a bullish trade. I had a nice rejection here, so let's look at this really quick. This flat level and then rejection right here was major. I didn't take this trade, but I was just looking at it and saying, I kind of feel I know what might happen with this market. So then when I come down and look at my delta, look at this. I had this low of a high bar of supply, and then I had two absorption bars, and I started showing increasing demand as the market stayed flat. I started showing increasing demand. So that's increasing buyers coming into the market. And then you could see about here, we started moving, and then we were gone after that point, broke this up this level. And then this is where we had multiple increase of demand coming into this market, and this market went higher. All right. So that's something I'm going to be talking about. Also, I'm going to show you how to trade that, how to use that to trade the market. Very good thing. So you could see also here, just look at this real quick. You could see this divergence right here. All right. So this was the increase in demand. All right. Decrease in supply. Right. So this is an increase in demand, but a decrease in supply. So therefore, an increase in supply, sorry. So we have supply coming into the market on a strong demand move in the market. But that's not showing me that the smart money is trading this right now. And then therefore you see what happened. The market dropped. All right. So just using this for divergence, understanding where the institutional traders are trading, where the smart money really is moving. You may think that at this point we're still bullish and the market's moving higher. Yes, that could be the case, but also look at what's really happening with your delta. All right. And then you could see that this is showing you a decrease in demand and an increase in supply coming into the market. And that's just what happened. The market dropped. All right. So those are some things that I'm going to be talking about, helping you learn and understand as we continue this Ichimoku approach. As most traders really like to learn about Ichimoku. I want you to understand that I am not just an Ichimoku trader, though. I am a trader, so I don't just trade Ichimoku. But since a lot of people love Ichimoku, I try to incorporate all these concepts to help you to understand how to get better entries with Ichimoku. Because basically, Ichimoku is not a tool that tells you exactly where to get in, because Goichi Osada did not have signals such as the TK crossover and so forth. I believe these are Western traders' techniques. But even though they are techniques that we use, like the Kumo breakout, the TK crossover, and so forth, Kijun-sen bounce, so forth. But for me, if you don't understand all those things, there's still other ways to get into the market using other tools with Ichimoku, such as your delta volume and divergences and support and resistance and fractals and all that stuff. So those are the things that I talk about and teach. And if you want to know more about it, just visit my website, www.fxatOneGlance. And until next time, guys, I hope you had enjoyed this and I hope you learned something from it. So have a great one. God bless. So long.